Hey everyone, welcome back to Corporate Decoder, the place where we really dig into the guts of company reports and pull out the juicy bits. Today we are dissecting Pentair PLC's latest quarterly report. Get ready for some numbers that might surprise you. Before we dive in, if you like getting the real story behind corporate filings, hit that subscribe button. And be sure to join our Discord community linked in the description for more insider discussions. We are looking at Pentair's third quarter and first 9 months of 2025 results. Let us start with what most people care about, the money. For the 3 months ending the 30th of September, 2025, Pentair brought in $1,022.0 million in net sales. That is up from $993.4 million in the same period last year, a 2.9% increase. Their gross profit, which is what is left after they pay for the stuff they make, also went up. It hit $418.6 million for the quarter, up from $393.2 million a year ago. That is a nice 6.5% jump. More importantly, gross profit as a percentage of net sales also climbed. It went from 39.6% to 41.0%, so they are not just selling more. They are making a bit more profit on each dollar of sales too. Now for the expenses that are not directly tied to making products, selling, general and administrative expenses, or SG&A, actually went down quarter over quarter. They spent $162.2 million compared to $190.4 million. That is a significant 14.8% drop. This is a big deal. When SG&A drops as a percentage of sales, it shows the company is becoming more efficient. It dropped from 19.2% of sales to 15.9%. That is a 3.3 percentage point improvement. This is largely thanks to fewer restructuring and transformation costs compared to the prior year. All this good news pushed operating income up significantly. It was $231.7 million for the quarter, a solid 28.8% increase from $179.9 million last year. As a percentage of sales, operating income is now 22.7%, up from 18.1%. That is a 4.6 percentage point gain. This shows Pentair is becoming much more profitable. Looking at the first 9 months of 2025, the story is similar. Net sales were $3,155.5 million, a 1.5% increase from $3,109.9 million in the same period last year. Gross profit also improved, reaching $1,278.5 million from $1,221.2 million. As a percentage of sales, gross profit is up to 40.5% from 39.3%. SG&A expenses for the 9 months were $552.6 million, a slight 2.2% increase from $540.7 million. However, as a percentage of sales, it remained relatively flat at 17.5%. Operating income for the 9-month period grew to $652.5 million, up 7.2% from $608.7 million. This put operating income at 20.7% of sales, up from 19.6%. Let us break down where these sales increases are coming from. For the 3 months ending the 30th of September, 2025 sales were up 2.9%. This was driven by a 3.4% increase from higher prices and a 1.0% boost from currency exchange rates. Volume actually decreased slightly by 0.5%. So a lot of the growth is coming from them charging more for their products. For the first 9 months, sales grew 1.5% overall. Here, price increases contributed 3.4%, while volume actually dipped by 2.1%. Again, higher prices are a significant factor in their revenue growth. Now, there is something interesting here called a loss on sale of business. For the 9-month period, Pentair recorded a $26.3 million loss related to selling off a business. This impacted the overall income, but importantly, it is a one-time event. The provision for income taxes increased from $75.3 million to $84.4 million for the 9-month period, leading to a slight increase in the effective tax rate from 14.1% to 14.8%. Now let us look at their segments. They have 3 reportable segments: Flow, Water Solutions, and Pool. The Flow segment saw net sales increase by 5.9% in the third quarter, reaching $394.0 million. Segment income for Flow also grew nicely by 15.1% to $95.3 million. As a percentage of sales, segment income for Flow improved to 24.2% from 22.2%. That is a 2.0 percentage point gain. The growth here was driven by higher prices and improved productivity. They also had a nice boost from the acquisition of Hydra-Stop in the third quarter. The Water Solutions segment, however, experienced a decline in net sales. Sales dropped 5.6% in the third quarter to $273.3 million. For the 9-month period, sales were down 5.0%. This decrease was mainly due to lower sales volume and some business exits. However, segment income for Water Solutions still managed to grow by 6.2% to $68.4 million for the quarter. As a percentage of sales, segment income for this segment actually improved significantly, up 2.8 percentage points to 25.0%. This is due to higher selling prices and good productivity gains that helped offset the lower sales volume. The Pool segment is showing strong growth. Net sales increased by 6.9% for the quarter to $354.3 million, and by 7.7% for the 9-month period. Segment income for Pool also grew up 3.1% to $116.2 million for the quarter. As a percentage of sales, segment income for Pool saw a slight dip of 1.2 percentage points to 32.8% in the third quarter. For the 9-month period, segment income as a percentage of sales actually increased by 0.9 percentage points to 33.9%. This growth is attributed to higher prices, increased sales volume due to higher demand, and the acquisition of G&F Manufacturing. Let us talk about cash. Pentair generated $764.0 million in cash from operations for the first 9 months of 2025. That is up from $680.4 million in the same period last year. This increase was driven by higher net income and favorable changes in working capital, like an increase in accounts payable. When it comes to investing in the business, capital expenditures were $45.1 million for the first 9 months of 2025. This is slightly less than the $51.7 million spent in the prior year. A big chunk of cash outflow in investing activities comes from acquisitions. In the first 9 months of 2025, $292.2 million was spent on the Hydra-Stop acquisition, which is part of the Flow segment. Financing activities show some interesting moves. Pentair used $175.0 million for share repurchases in the first 9 months of 2025, compared to $100.0 million in the prior year. They also paid out $123.3 million in dividends. Pentair defines free cash flow as operating cash flow minus capital expenditures. For the first 9 months of 2025, free cash flow was $719.0 million, an increase from $629.1 million last year. This means they are generating more cash that can be used for dividends, share buybacks, or debt reduction. Looking at their debt, Pentair has a $900.0 million senior unsecured revolving credit facility. As of the 30th of September 2025, they had $680.0 million available. They also have a $1.0 billion term loan facility. On the balance sheet, debt levels have decreased. Total debt is $1,580.1 million as of the 30th of September 2025, down from $1,648.0 million at the end of 2024. This is a positive trend showing they are managing their debt effectively. The balance sheets show growth in identifiable assets, especially in the Flow and Pool segments. Total identifiable assets for the reportable segments were $6,329.6 million, an increase from $6,005.5 million. Goodwill also saw a significant increase to $3,528.8 million, largely due to the Hydra-Stop acquisition. Intangible assets also grew. They are also managing currency risks. As of the 30th of September 2025, they had outstanding foreign currency derivative contracts with a gross notional amount of $51.8 million. They also have significant cross-currency swap agreements to manage exposure to the euro. This shows they are actively managing financial risks, which is smart. A notable item in the fair value measurements is a contingent earn-out liability of $8.0 million related to the acquisition of G&F Manufacturing. This means part of the purchase price depends on future performance. Pentair is still working on its transformation program and restructuring initiatives. For the 9 months ended the 30th of September 2025, total restructuring and transformation costs were $74.9 million. This includes severance costs, asset impairment, and other transformation expenses. While these costs are significant, they are part of a strategy to improve efficiency and drive future growth. Overall, Pentair is showing signs of resilience. Net sales are up, driven by their ability to increase prices. Gross profit and operating income are improving, especially due to reduced SG&A expenses and productivity gains in their segments. Their Flow and Pool segments are performing well. While Water Solutions faces headwinds but is still showing resilience in segment income through price increases and efficiency. The company is actively managing its debt and cash flow with a focus on free cash flow generation. So here is my take. Pentair is navigating a complex economic environment with inflation and global uncertainties quite effectively. They are passing on cost increases to customers, which is a sign of strong brand value and demand. The real story here is their improved efficiency, particularly in managing SG&A and driving productivity within their segments. While the Water Solutions segment is facing volume challenges, the company's overall strategic focus on price, productivity, and acquisitions, like Hydrostop, seems to be paying off. They are not just growing revenue, they are growing profitable revenue. The significant investment in goodwill indicates strategic acquisitions are a key part of their growth story. What do you think about Pentair's performance? Are their price increases sustainable, or will they face customer pushback? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more dives into company financials. And as always, join the conversation over on our Discord server, linked in the description. Thanks for watching, and we will see you in the next one.